The CEO of Amazon, Andy Jassy, just gave investors 220 billion reasons to buy Micron stock, to buy SK Hynix, to buy NVIDIA, AMD, Intel. He just reiterated what we all really know as AI stock investors, that the AI stock boom is not over. It's simply the fact that Wall Street right now is getting it wrong. If we look at what's going on in the market, I want to share this. We'll come back to this article because there's a lot of good stuff here. If we look at what's going on in the market right now, Micron is down 1.76%. SK Hynix is down 5.4%. But look at the market. The NASDAQ is up 268, and yet Micron is down. SK Hynix is down. I haven't even looked, so let's see if this is what's playing out here. AMD is down 1%. I'm sure if I looked, NVIDIA, Intel, SanDisk, a lot of those guys are down as well. And why? It is simply the fact, I firmly believe, that Wall Street still doesn't understand or want to believe or is not comfortable with CapEx expenditures for AI compute build out. And that is what's interesting. Okay. And ultimately, we are here as long-term investors in Micron and all the other AI stocks, SK Hynix and all that. And I think we will be basically rewarded very, very well. But here's what I want to share with you. Amazon's just come out and they raised their AI budget to 220 billion, adding another 20 billion. Okay. This goes on to talk about the fact that Amazon CEO has recently acknowledged the company's capital expenditures budget is rising due to surging memory chip prices. So this is specific to Micron, SK Hynix, and what have you. And the fact that he says shortages could last until 2028, signaling robust demand for AI memory during the next couple of years. We already know this. We have known this. We have talked about this a lot here on this channel, right? By the way, if you haven't already done so, please hit that subscribe, hit that like button. I am really, really, really trying to build this channel, build a community for you guys. So if you like what I'm doing, please hit that like button below and definitely hit that subscribe button because I make content for you guys every single day. So look, the world's largest company, Alphabet, Microsoft, Amazon, Meta, everybody is, and Oracle, they are expected to spend over $700 billion in AI expenditures this year alone. All right. Meanwhile, what really this comes down to, this is not a temporary surge. This is a multi-year race from these companies to procure land to build their data centers on, chips, and the components that power AI servers. As each quarter passes, CapEx numbers rise. The latest explanation from Amazon Chief Executive Andy Jassy points to one overlooked bottleneck: memory. We know this. We know this. It's not overlooked. We have been talking about this for a long time. What I think is interesting here is that Wall Street continues to get this wrong, continues to have overreaction, emotions, panic, selling, all around CapEx expenditures. And yet they know that these companies are going to be raising CapEx expenditures to spend money on their AI compute initiatives. And I will also say, on the other hand, and I've said this, that if these companies, Microsoft, Amazon, Meta, Oracle, Google, if they did not have AI compute strategies and were not spending billions of dollars to build AI-related products for their commercial customers, their retail customers, respectively, then Wall Street would be pummeling them for that. The fact that they don't have a cohesive strategy, that they're not spending money on their AI compute platforms. They would be pummeling for that. So these companies and us as investors literally are in a no-win situation right now. If you look at investing in these assets, Micron, SK Hynix, and all the others, it's now turned into a volatility factored situation. Movement almost every day. Let's call it what it is. Micron should be up today. It should be up 2 or 3, 4% because the entire NASDAQ is up 290, almost 300 points. And yet Wall Street and investors continue to punish Micron, punish SK Hynix, punish AMD, NVIDIA. Will it turn? Of course it will. It will turn almost unexpectedly, and you'll start to see capital flow back in. But Wall Street will continue to preach the narrative of, we don't like this CapEx expenditures. We're not real happy. Now there's circular financing. We don't like that. They are literally trying to pick apart anything they can to draw down, I think, the price of these stocks as it relates to the AI computing space. So you have to have fortitude. You can't let your emotions and your panics take over. Because again, guys, the CEO of Amazon has come out and specifically addressed the fact that there's an AI memory shortage. Yes, we all knew that, but he's addressing it in the context of, like, we are going to spend these CapEx dollars. It is not going to slow down. And yet Wall Street continues to not reward Micron, SK Hynix, the other AI stocks. Again, because I think fundamentally they are trying to figure out how to price this in. They cannot get their brain around and get comfortable with CapEx expenditures associated with AI compute build out. Thus, the narratives and the trends that come out and the talking heads are all preaching somewhat of a bearish message associated with that, when there's not a bearish situation taking place. The fundamentals have not changed. The memory shortage has not changed. Higher prices for memory equal higher margins for Micron. Higher margins equal higher earnings for Micron stockholders. That has not changed. Shortages for memory chips from Micron, SK Hynix, Samsung, SanDisk, what have you, has not changed. The demand is going to continue to go up. That has not changed. Everything that has changed is the messaging coming from Wall Street associated with CapEx expenditures are too high. We don't want you to spend that much money. We're not comfortable with that. But yet, remember what I said. They would also be pummeling them and hurting these respective companies if they were not spending this build out, this AI compute build out money. It is a frustrating time right now to be a Micron holder, an AMD holder, NVIDIA, what have you, SK Hynix. Insert any AI related stock here. It's frustrating. It is. It's frustrating for me. It's frustrating for me to cover this because I feel like I'm saying kind of the similar things. And I'm only saying this in the context of, this is what I believe. So you have to make your own decision of what's right for you. But ultimately, I'll come back to this. I'll come back to the fact that Amazon just added $20 billion to their AI budget. And that's 220 billion reasons for me to be a Micron holder, an SK Hynix holder, and all of the other top AI stocks. It's as simple as that for me. And I have to be okay with the fact that Wall Street is going to continue to get it wrong for the short term here until they figure out how to get comfortable with CapEx expenditures from these big hyperscalers and from these companies. Because ultimately that will happen. The tide will turn, the trend, the narrative will all change, all of those different factors. And then they'll look up and go, well, we shouldn't have been worried about that. Oh, well, we shouldn't have really factored that in. It's not really a big thing. You watch, the narrative will change. But the narrative will change, I think, after they've been able to get bigger slices of Micron stock and drive it down even lower in the prices so that they could buy and all those kind of different things. Keyword being manipulation. All right. Thanks. Please, please, please like and subscribe. See you.